Alright guys, welcome to another video. This is Wish Me Well. So the past couple days has been very interesting in the market. As you guys generally know, volatility has been ridiculous. Even NQ is moving like, or MNQ is moving like NQ when it comes to price per tick. And it's definitely thrown me off a little bit personally when it comes to risk management, ATR, and how I normally trade with my risk to reward. So I had to readjust my risk to reward to the new volatility in the market, which hasn't been in my favor. But as we continue to get back to the normal, which is the new normal, as we go into this new economy with the economic tariffs and how that's going to affect the market, people selling off in fear, etc. We've been definitely bearish for the past few weeks. I think that has definitely, especially for the past since March 23rd, we just went on a selling spree. Then we had this major whiplash on Monday, another sell-off Tuesday, and then this just major bullish candle at 1:30 today. So moving forward, I do think that we may potentially be continuing to sell off from here. I'm not sure exactly. I have to verify why we had such a bullish move. Is this the bottom? Are we going to start going bullish from here? I do not know at the current moment. I would have to, if this is news driven, we would have to definitely see what that news was to see whether or not it has given an optimistic outlook on the economic future of America. I'm not a financial advisor. If you are looking for financial advice, please do seek professional help. This is only for entertainment purposes only. All right, but at the end of the day, in all honesty, on the 5-minute, it has been pretty clean when it comes to areas of interest where you'd want to have taken trades. Normally, as you can see, I personally like to look at Asia, how Asia performs at midnight and then at 8:30. You guys know here I like to use breaker blocks and that type of setup. So just going over Monday, just starting at Monday so far, I'm going to try to do trade recaps or just market reviews every day, whether I take a trade or not. I think that's just good on the mind. So for Monday, we had this major drop, which was the last drop. So this low is low. This is pretty much our low for the week. Will we come back down here? I hope so. Honestly, I hope the market continues to drop so we can get better prices on our long-term investments. So Monday, we did have this major open gap here that needed to be filled almost immediately. We didn't get that fill until mid 6 a.m. London. So, but if you notice here, I have to go in pretty close. If you notice here, we did sweep this Asia low right there. We swept that Asia low, and if you go into the time frame, you'll see that price action gave us that market structure shift. So the Asian range sweep setup would be that Asia low getting swept, and then we would target the other end, which would be here, and then we'll just call that buy side liquidity. And if we go down and check the, let's just say 3 minute, we go back to here, we do get that market structure shift there, do get a nice market structure shift here. We didn't necessarily get the pullback into the, let's make this nice and clean. We didn't actually get the pullback into a fair value gap or have a fair value gap entry in this case, but this is only on a 3 minute. So if we drop down to the 1 minute, we would see exactly what we're looking for in this case here. So as you get, and this is why I personally think that we should always have multiple charts open at the same time, because of the fact that you don't want to get lost in all of this price action, but you definitely want to understand that this is where we're heading towards this buy side liquidity in this specific setup, the Asian sweep. And I am looking for my market structure shift, and I am looking to target this H high. So in this case, you would see this breaker structure to the downside, literally right at the Asia low. Here, let's zoom in just a little closer. I know it's kind of tough. It's kind of tough to see. So we're focusing here on this specific setup right when we reach the Asia low. So we'll just label that Asia low. So we got our breaker structure to the downside, market structure shift to the upside. Then you know the deal from your low to that high, you would want to look for your price action and a pullback between 62, generally 62 to 75. And you would want to place a trade anywhere in this area from here. Stops at your low, targeting either your most recent there. You can target this high here, and this would be your immediate high, actually, sorry. It's going to be your immediate term high. Then you have your sorry, that was your short term, that was your intermediate. This is your short term. So I'm getting it mixed up. So that's your term intermediate high. Here's your short term high, and then your Asia high here. So in regards to taking this trade, this would have been a around 70 tick stop there. So like I said, you could target it that short term high, first standard deviation, intermediate term high, or you could have target your Asia high there. Definitely would have been a nice trade to have if you set an alert at that Asia low to see if you can capitalize on a trade like that. Simple, super simple. And again, you have that breaker there too, because it is a immediate breaker structure to the downside, and then an instant market structure shift to the upside, which gives us that breaker. So all of those things as a confluence in order to get you into this trade here. So I think that is very nice to see. Very nice clean setup for Monday if you guys are up at the 3 a.m. mark. And this happened right at 3 a.m. 3 a.m. here, between 3 a.m. to 4 a.m. and we were off to the races by exactly at 4 a.m. Volatility just jumped up to short term immediately. 1 hour trade right at 4 a.m. Volatility kicked in to run that short term high, which would have been a nice, great trade there. Yeah, so that was Monday. And then as you can see, as we tap into the gap here, which was presented right at 6 a.m., we gapped down. So we hit the equilibrium of that gap. Then as you can start to see, price starts to weaken. Doesn't necessarily break that low just yet. So you want to start to keep an eye on that low, your dealing range. Between the low and that high, we had the breaker structure. And then at this point, we're in the middle of this dealing range to see whether or not we're going to break that, continue higher, which will look like price coming back here just to go straight up, give us another pullback, and then continue bullish price action. But we don't actually see that. We start to see this market structure shift, but then again, we won't automatically assume that we are going to break this low because this is still internal. This is just a hint that bearish price action is a little more in control at this current time than bullish price action, and that is very important to understand that these are minor hints of the direction that price does want to go. So you saw that price gave a market structure shift, pull back, doesn't break this high here internally, gives us a breaker structure. So now I'm a little more confident that we might potentially take this low. I won't assume until I see it actually happen. Then we take the low right after the breaker structure. In the next few minutes, you wouldn't even have to wait that long to see that we actually did take this low that created this breaker structure, telling us that we are now heading down internally. We did get a little consolidation with a sweep of the high just to continue to go lower, sweeping out that high as we go into the 8 a.m. session. So as of now, we had our pullback. We had a very impulsive move going into the 8:30, sweeping that high, keeping this high intact. And now we're just waiting to see. So as of right here internally, we're bullish, sweep high. Then we sweep liquidity here. We don't get any other bullish price action until later on in the day, but just to understand that we have our bearish 1 and 2 market structure shifts back to the upside. So in this price leg, in your bias, you should still be bearish, and you should continue to see these bullish impulsive moves as liquidity sweeps until you start to actually see price action start to actually move forward bullish after these market structure shift. It's a lot more bearish price action here than market structure shifts back to the upside. It doesn't really matter how strong these pushes are up. It's just how deep price wants to liquidate buy stops in order to continue moving in the overall direction. And in this case, the hint was a lot more bearish price action than bullish price action. So even when you get into this type of price action here, you would see that, okay, this was a very bullish move up, manipulation move to the upside. It looked like it swept this liquidity here. Again, we're still filling gaps and price that was inside the new week opening gap. So we are taking that in consideration, that it is just manipulating back to fill more orders that are within that gap, just equalizing price. So we're taking that into consideration as well. Nevertheless, we are still looking at price action to continue to move in the direction that we are seeing majority of price action moving, which is bearish. So as we observe price, we're seeing that price is manipulating up, rejecting off, manipulating up. These moves here, we see no price action in these extra moves, so we wouldn't actually take anything. We wouldn't actually be taking any trades, or really nothing to read here. We're just letting price do what it wants to do until we get another confirmation that we are actually breaking structure again, which is our market structure shift here to the downside. Still in alignment with the overall price action here, telling us that manipulation is generally most likely over. And then we see the market structure shift, and then we start to see if there's an entry going into 9. So market structure shift, if there was a potential entry from here to here, doesn't really look like it. Very quick move, not a deep market structure shift, not giving us much area to enter into here. Not much chances to get in there, but not really the strongest confirmation or the cleanest entry in my opinion, so there wouldn't be a trade there for me. So as we continue forward, we get a higher time frame. Let's delete this. Higher time frame breaker. Let's go to the 5 minute. Let's delete all this. Oh, actually, let's keep that. Higher time frame breaker block. We got the manipulation down. Swept this low here. Let's turn that red. Swept this low here, giving us a push to the upside after a break structure to the downside. What is that? Breaker. Actually, we have the preset for that, and you could have actually seen price give us that market structure shift and then start to take bullish price action into consideration. So that's on the 5 minute. So like I said, you definitely want to be on multiple time frames, just in case you have like multi time frame analysis is one of the main structures and principles that you should be following when you do chart analysis. I only use one chart at a time right now during trade recaps, because it's just better to see on the during the videos, and just I can point out things in better detail. But during trading sessions, I do have multiple charts open. I do have I think 4 on the layout. So going back to the 5 minute breaker, we see market structure shift here, and sometimes these trades really don't give any other confluence unless you're on the 15-second chart when it's time to go. Yeah, sometimes there's just nothing left. I don't even see a inverse that we could have taken. Really no inverse. This is where you start to go down to the 15 second to find an entry. Yeah, really nothing in here, in all honesty. Really nothing in here to have taken a trade. I mean, this would be a discretion trade. In all honesty, it would be a discretion trade. At your discretion, do you think that you would have taken an entry? Do you think you would have taken that entry there for a long? Would you have taken an entry there? Would you have taken an entry there? I mean, we can argue that we could have set sell limits because our bias was bullish. As you can see, honestly, there was multiple entries to go long, but where they're actually clean setups and the long majority of the people, I don't think have the plan to go down to the second chart. So we're just gonna, for the benefit of the argument, just stay on the 1 minute and see if there was an entry for us to take. And I honestly don't see any. After identifying that breaker, you would have to, based on your own convictions, determine whether or not you would have taken longs after we retraced back into that breaker. And definitely would have had multiple opportunities if you were sitting at the charts during these times. Obviously, yeah, during the New York session, you're most likely at 10 a.m. sitting at the chart. Another opportunity at 10:40. Another opportunity, yeah, let's just say 11:15 if stops were below the breaker. 11:26 and 12:59, almost 1 o'clock. Any of those trades would have done you wonders, netting at least 3.3%. I mean, it's more like anywhere between 500 ticks, 500 points. That's like 2,000 ticks, but 500 points, depending on how long you hold, what's your risk to reward ratio. That's all discretionary. But taking longs out of this breaker at any point of those 3-4 opportunities would have been very profitable. Just simple mark, just basically simply off of that breaker structure. I mean, off of this breaker setup would have been amazing, as you can see here as well. If you target that Asia high, would have been a very nice opportunity as well. That was just Monday. Goodness. Let's go on to Tuesday. All the good stuff happened at New York. Clean, really clean one directional day. It's really hard to have missed an entry there. As you can see here, Asia high got swept. We didn't end up taking Asia low until 1 p.m. The price came all the way up. We're just short of the previous day high, which was liquidity generated that we did sweep today. So those equal highs were definitely swept today. A lot of people shorting, continue to short the market. They're just like, oh my goodness, this is going to be a crash, recession, just the whole narrative of price just not going up any longer for a good while. And I can only imagine how many orders are sitting up here, and here. and all of the orders sitting up here. Look how much we swept. We swept 1, 2, 3, 4, like almost a week's worth of liquidity. Short orders just wiped out in a few minutes with this massive move to the upside. Pretty crazy, but I digress. Back to Tuesday, we get, what do we get here? We got the breaker again. Right here, we market structure shift to the upside, breaker structure to the upside, market structure shift to the downside. Here, giving us this breaker there, and inside there is the market structure shift. If you guys are familiar with this setup where the bearish breaker structure is inside the breaker, you guys know what that's called. I don't really like to say the name because it's kind of weird to me. So if you just take that entry and you targeted Asia lows, would have been way past Asia. That risk to reward is not that good, but that'd be your first target. Second target, just for argument, I mean, who knew it was gonna drop that long or that far down? No one. I mean, you can only hold your trade. Maybe 3. So if you would have held it for the rest of the day, you would have at least gotten maybe 3.4 R. I think you're supposed to actually hold on to your place your stops at that previous candle high. I think that's the rule. But just another great trade there. Simple breaker, aiming for the other side of liquidity. Really nothing else to say about this trade here. Really nothing too crazy to say. And then today, simple Asia, another Asia sweep here. Asia sweep there. Market structure shift to the upside. We didn't get a reasonable pullback unless we were on the 1 minute. Let's check the 1 minute for today. Or is our market structure shift? Yeah. Still market structure shift, internal there. Internal market structure shift here. Still no significant pullback into our 62 to 79 area. But we did get that breaker, as you can see here, giving us that indication right there as well that we did tap into it here. Also inside of a fair value gap. You guys know what that's called. Let's just say at the close of that candle. Stops below. Aiming for Asia high. Now, before we look forward, because I don't remember whether or not we ever made it, but as you can see, we do. Targeting the other side of Asia is a nice 5R there. So, like I said, Asia has to be swept on the bottom side. Market structure shift, if you want to use the breaker, in case of not getting that significant pullback inside an OTE, you could use a breaker. As I given you 2 examples of how you would do that. Those would be your options. Going into London at 3 a.m., shooting volatility straight up into that Asia high. Very nice setup, super clean, super simple. 3 rules: Asia sweep, market structure shift, OTE pullback, and or a breaker. So price did just consolidate. As you follow price action, you would see direction. Majority of price action was bullish, even though we did get pullbacks into that area. So if you have a habit of drawing your OTEs or your fibs on your market structure shifts, and you're just convicted that you want to take shorts on retracements targeting internal lows or short-term, short-term right here, short-term lows, you could have targeted that low, and get a small scalp there. And if you held it long term, stops above the high there, and you were actually able to weather the storm, which if you took the trade and you just went to sleep, or you're the type disciplined enough not to look at your trades, and you're just like, if I hit TP, I hit TP, if I don't, I don't, you would have been able to take that first standard deviation there, or second standard deviation would have been a home run win. Definitely home run win. And like I said, these rules, I would not say these rules are too bizarre. Like these trades do look ridiculous. They do look unrealistic. But I'm not even using too many of the concepts as confluences. The examples I'm giving you here are just breaker, the definition of a breaker, fair value gap. I've only shown you the Asia sweep, market structure shift, fair value gap entry, and a fib, and a breaker. Those are only 3 things I've shown you. So whether or not and the only reason why, it seems so unrealistic to catch a trade like this is because if you were the type, if you look at your chart, if you're staring at your chart after you place a trade and you just not the type, and your emotions are going to kick in throughout this price action, this move here, you would have probably broke even. Probably would have moved to break even. And during this drawdown, seeing profit hit, probably would have taken your profit there, and probably would have closed your trade there. There's just so many. You probably would have closed your trade down here, probably would have closed it there, and then you never would have made it all the way to second standard deviation. There's just so many emotions as a human, you would have, as human beings, as emotional creatures, that we would have experienced going throughout a trade like this. Like I said, especially here, if you would have saw price shot up, you're in so much profit, and you're just like, I want to take profit here, I want to close trade here, and knowing that the Asian range setup is holding it to the other side, and then watching all your profits go away here, it's just not something you would want to experience, not something anybody wants to feel or emotion go through. So it's like, even though your capital is still good, your emotional capital is what's getting spent throughout holding these type of trades. And the only remedy to that is just not looking at the chart, just understanding, okay, my setup, my back test allows me to hold, depending on the setup, depending on the overall bias, depending on what time frame, multiple time frame analysis I'm using. If I'm using 4 hour, 15 minute, 5 minute, and I'm targeting a 4 hour low, I'm gonna hold to 2 standard deviation. Or if I'm doing 1 hour, 5 minute, 1 minute, I would have to look back at the alignment time frame, not alignment. I don't even think that is part of the concept, but it's been utilized and it's worked for many. But if you're holding on to an hour low, you would want potentially maybe to see that your first standard deviation is in alignment with the week low or the hour low that you're trying to target, along that's in alignment with your bias. Those things are just things you want to take into consideration and understand. I'm going to hold until first standard. I'm going to hold till second standard, no matter the drawdown, because this is what my strategy's results has shown me, that is pushing my profitability to the next level, getting me to the next payout, getting me to this, getting me just overall. My back test has proven that this works for me specifically, or it works for you specifically. So if just understand that these type of trades are not impossible. They do seem unrealistic at the time, but people do hold these trades and they don't look at their charts. They do themselves a favor, understanding the situation, their emotions, and where they feel like their emotions are attempting to compromise the overall result, that they don't look at the chart. They just know, I'm going to target that hour. I took an entry on the 1 minute, but I'm going to take, let's just say outlook. I'll move to the M15, and they're like, I'm going to target this breaker structure, or this high here, which eventually turned into a breaker structure. You see, it turns into a higher time frame breaker structure. On this time frame here, it's an internal breaker structure, but you could have seen that this swing structure here, this trade you couldn't uphold because it actually didn't reach this low until after trading hours are already over. But you could have held, or you see this high here, it's a good example. This high here is a market structure shift to the upside, and this is where you'd want to hold. So this would be, technically it would be a strong high. But if you're looking at multiple time frames, you'd understand, okay, I'm holding until this area here, and all you see is one candle pullback. You'd see here a price pulls in your direction. It's just only a one candle pullback on the M15, goes into price action, or goes into profit. This 2 candle pullback, and you look, and it's like it only wicks. Your drawdown only wicks, closes back here, and then you just, over 15 minutes, you're just looking over every once in a while, and you're just like, okay, this candle that pulled back all the way back to my entry and back into drawdown ended and closed like this. Doesn't seem too much as a heart attack situation that I feel like I need to close because of the way it closed. It was only one candle. But if you were on the 1 minute and saw like 15 candles up or 10 candles up, like 5 candles down, like these 10 minutes, you're just staring at the chart, just contemplating whether or not you should close that trade. Or the 15 minutes, the 30 minutes it took, you spent in drawdown just watching each candle. How that can compromise. You spent most of your mental capital on 30 minutes of the trade. 15 minutes on the trade, just spending multiple minutes of your mental capital just looking at this, just having a breakdown mentally on being in drawdown. It's just not something you want to do to yourself. So some traders go on a higher time frame. They just know they're targeting 2 standard deviations. This type of price action doesn't look as bad to them, doesn't have their emotions react as much when doing stuff like that. So moving on to New York session, that was my rant, but Nice little Asia trade here. Also London trade after 4 a.m. here. Let's drop right back to the 5 minute. Let's not like always go to the 1 minute. I know it's just like the best. So price comes back. You would see internal price action turning bullish, and then right at 9:30 we get market structure shift to the upside, giving us a market structure shift on a higher time frame, coming all the way up, giving us a pullback into this fair value gap here. We extend that. Giving us a pullback into that. Drop down to the 1 minute. It does seem super sniper entry. It does seem like super sniper. I actually might start taking trades like that. Like be on the 5 minute, see an entry that is based on the 5 minute where it's a fair value gap, an M5 fair value gap, but we get the re-entry here. And if my bias is bullish, in this case, like if my bias was bullish and I see a late fair value gap entry to target the week high, I'm going to take it. Like just moving forward, just so if you guys see, because every time I do see late fair value gap entries, I normally don't like to do it because I just don't have the confidence in the trade actually playing out after getting an entire pullback like that we're gonna continue to move higher. So, but technically it is valid because we're getting the buy model, just a minor pullback and then a continuation high. It's all about you understanding whether or not your bias is actually correct. If your bias is actually correct, this pullback, even though it happened like it took a while for the pullback to actually finish up and then continue back bullish, it does not really matter if your bias is correct. If bias is bullish, it's just a pullback. Like I said, if you're strictly watching this on the 1 minute, you're gonna want to be tempted to change your bias after seeing how much bearish price action you're watching play out, even though you should have remembered that, okay, this is just a pullback. This is 1 minute. It's going to be like 50-60 candles of a pullback, and my bias is still not going to change. Like, you have to be disciplined enough to remember that your bias is your bias. It's not going to change unless you see something super significant happen. But taking into consideration, this should have just been a pullback, and you would have taken a trade there to target this high here based off a market structure shift. You even get a breaker here. I think it would only be valid up until that point there. Yeah. And in that case, even if you just did that, it would have been a nice few points. Market structure shift to the upside, downside, market structure shift to the upside, breaker, pullback, trade it into that area there. Maybe target 1 to 2. Wow, perfect. 1 to 2 right at that high. Isn't that interesting? Sometimes it just really works like that. Nice 1 to 2 there based off the breaker entry. Targeting. There's really nothing on that over here to be targeting like that. This would be reaching. You wouldn't have, okay, I want to target this candle here. Like, you wouldn't have done that. I wouldn't have done that. I don't think you would have done that. Maybe. I'm not gonna take that away from you. You probably got it like that. Nevertheless, Then we get the major move of the day that really was just, I don't know if this was news. I don't know if the people's made a speech or something where price just decided to do this. But we got a gap in the middle of the day, which instantly gets filled 2 minutes later, or 1 minute later after this candle close, came back, filled it, continued to push higher, and just that was just the price action for the day. We had, if you just look out, guys, if you just look out for the price action, the breakers, I think those are just giveaways, just free giveaways, because it's just telling you literally we're bullish, but I'm gonna liquidate, I'm gonna trap sellers, I'm gonna do a liquidity sweep, and then don't worry guys, once we get above the breaker, take the pullback, jump in at the close of the candle, take a little 1R, 2R. Ooh, you don't even get it, honestly. Yeah, you wouldn't. This trade wouldn't even have been possible. You can't really take trades after 3. It would not let you take that trade, guys. But just for the sake of understanding, it shows. But super awesome couple days. Just follow price action. Should be fine. Follow price action. Follow your trading plan. Follow your setup. And you'll be able to capitalize on these type of trades. Thank you once again, guys. Make sure you like and subscribe, and see you guys in the next one.